I would like to welcome all the investors and analysts on this conference call. Wish you all a very happy Dhanteras. Based on the inputs received earlier, seeking time to analyze the results before the call, we decided to keep the same on next day of results declaration. Hope this schedule is conducive to all of you and you have been able to go through the detailed numbers as well as the presentation released. Call it a V-shape or a sharp Nike swoosh, strong recovery unfolded in Q2 of FY21 as unlocking was affected in phases countrywide and it is here to stay. We have witnessed strongest quarter-on-quarter growth of over 40% across our 20 toll assets in the group and a 36% quarter-on-quarter growth for the 4 assets housed in IRB parent company. Though it was on a low base of Q1 FY21, but it was most pleasing to note the collections reaching and in certain cases even breaching the pre-COVID level per day collection towards September end and in subsequent weeks. I would like to draw your attention to the initial slides of our presentation, where we have provided project-wise details of the recovery trend witnessed. Every crossover of blue line over the red is reflective of the intrinsic strength and deep value that these assets carry. The surge in economic activity is seen across all facets and sectors. Especially the continuing momentum during the festive season is very encouraging and has further led to some of the projects clocking highest till date collections. Our flagship project Mumbai-Pune 2 has displayed a sharp recovery. Intercity traffic movement between Mumbai and Pune got a green signal only towards August end and pickup in the collection since has been unparalleled. We are currently at a daily run rate of 3.4 crores, up from 90 lakhs per day in April and 2.4 crores per day in August. The trend is characteristic of the resilience this project has and reflects the robust potential that lies ahead. Notably, despite transferring 9 assets to private InvIT, toll numbers for IRB Parent Co are just 10-12% lower year on year from 443 crores down to 391 crores due to the strong support from Mumbai-Pune project. The cash profits of BOT segment has in fact improved from 60 crores to 86 crores year on year for the quarter, driven by change in project mix. I would like to take a moment here to touch upon the percentage of cashless transactions being handled across all projects in IRB group. With increasing government push on RFID implementation, the average has increased to over 66% for us, including some of the projects crossing 80% mark as well. As the FASTags become mandatory from 1st January 2021, this percentage is expected to grow significantly further. So net-net, there will be no human intervention in collecting, handling, moving to and depositing cash in banks. The whole process will be automated and run on systems providing sturdy, reliable, transparent and cost-effective processes. As a company today, all our operations run on SAP with every penny being reflected and accounted for in the system automatically. Higher cashless collections would complete the loop and make all our processes automated. Construction pace too has bounced back to 80-90% of pre-COVID levels. New project bidding was deferred and so was its execution, given the constrained labor and material availability on account of COVID situation. Resultantly, although the Q1Q construction revenue has remained stable, we do see a dip in the construction revenue from 1358 crores to 777 crores on year-on-year basis. This explains the marked drop in profits year-on-year. Balance order book stands at 12,100 crores, of which 5,100 crore is construction order book, providing good visibility for the next 4-5 quarters. We expect construction revenue to pick up in third and fourth quarter with monsoons behind us. We completed Yedeshi-Aurangabad BOT and achieved full COD for the project, resulting in a 15.5% increase in tariff towards end of the quarter. With construction completion and smoothing of bottlenecks along the stretch, we are seeing strong growth momentum for both Solapur-Yedeshi and Yedeshi-Aurangabad projects. Further, we expect to achieve completion for the Agra-Etawah project soon, which will see a tariff revision of almost 65 to 70% for the project. We would likely be able to complete at least 2 Rajasthan projects for this fiscal, if not all 3. All these developments, coupled with continued growth in traffic, are expected to result in a strong second half and considering current momentum, we expect to return to profit by end of the year. We have also started the process of next round of fundraise in our private InvIT and have filed a letter of offer with SEBI for rights issue amounting to 510 crores in the 51-49 ratio for IRB and GIC affiliates. As per the guidelines for the same and timelines mentioned in the document, we will be closing the same within a week. So overall, with operations getting back to normalcy and further liquidity enhanced through the rights issue, we are well poised to tap growth opportunities available in the market. We are aiming to back 4 to 6 projects in the bids lined up by NHAI for the second half of FY21. The new guidelines issued by NHAI for HAM, MCA are encouraging and bring down the commercial loopholes for developers. We look forward also to the 3,000 kilometer BOT bid schedule NHAI has been highlighting. With this, I would request Anil to take you through the financial analysis before we open the question and answer session. Over to you, Anil.
Thank you, sir. I will present the financial analysis of Q2 of FY21 versus Q1 of FY21 because corresponding quarter is not comparable because the Q2 of this current financial year was also having some impact of the COVID. We are comparing the Q2 FY21 and Q1 of FY21. Total consolidated income for Q2 of FY21 has increased to 1,169 crores from 1,073 crores and registering growth of 9%. The total consolidated toll revenue has increased 364 crores from 262 crores in Q1 of FY21, registering growth of 39%. The consolidated construction revenue for Q2 of FY21 has remained at rupees 759 crores from 760 crores in Q of FY21. EBITDA for Q2 of FY21 increased to 601 crores from 529 crores in Q1 of FY21, registering growth of 14%. A strong bounce back in operation has resulted in 14% increase in EBITDA on Q for quarter on quarter. However, same has not reflected in cash profit increase due to 2 months moratorium was available and part repayment of moratorium availed in the Q1 of FY21. The interest cost has also increased from 366 crores to 435 crores and depreciation has also, in line of the revenue, the depreciation has also increased from 84 crores to 129 crores and PBT has decreased to 37 crores from 79 crores. PAT after the share of loss from JV, loss is 20 crores as against the loss of rupees 30 crores. In terms of other income breakup, we had other income of 18 crores in current quarter in the construction segment and 27 crores in the BOT segment. In terms of debt profiling, we have net debt of 12,700 crores, cash of roughly 2,150 crores, and net debt to equity is 2.3. Now I will request moderator to open the session for question and answer. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question, may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yeah, thanks. Good morning, sir. Thanks for taking my question.
Sorry, your audio is not clear. Can you use the handset mode while speaking?
Is it better now?
A little better. Thank you.
Yes. Sorry for that. Thank you, sir, for that. Thanks for taking my question. So my question was, first question was on the toll collection numbers. As we have seen in second quarter, we've almost come at par with the toll collection in most of our projects. What would be the current status right now, given that we are already 2 weeks into the month of November? So are we already past the toll collection that we were doing on a daily basis on most projects last year? and how do you see it picking up in the remaining part of this quarter and Q4 as well?
Good morning, Vibhor. I think you are right. The strong collection has continued even in this quarter. And even as we speak, yes, we in most cases, barring the under construction project, in rest of the projects, we have either touched the pre-COVID levels or in some cases we have even crossed that number. That is right understanding.
And we expect the growth to continue in Q4 as well?
Yes. I think given the present momentum, we expect to actually have a year-on-year growth in the fourth quarter. In fact, we are witnessing one of the strongest growth presently. And if this continues, I think Q4 for sure we will be able to actually give a year-on-year growth rather than not only the quarter-on-quarter but year-on-year growth as well.
Right. And then for most of these BOT projects, the provisions that the government had made that because of the lockdowns, the concession period of these projects will be extended by minimum 3 months and maximum 6 months. So are those calculations still going on or have those been finalized for the project?
No, I think the minimum 3 months is a given because that is as per the Finance Ministry's announcement. Whether it will be how much more than 3 months will be a part of the calculation. We have already submitted our claims basis that, and we have to keep updating them. So I think by early November, we have, in most cases, we have reached the 90% number. So we have submitted our claims, and once we have a final say from NHAI, we will keep all of you informed. But one can surely pencil in a minimum 3 months.
Right, sir. Yes. Also, sir, on the new HAM guidelines which have recently come from NHAI, I think many of those are actually quite important as we as developers have been asking that from NHAI, so it's good to see that. But all of these are only from the prospective projects, right, sir? There is no retrospective implementation or changes in concession agreement that is being either contemplated or being asked by us as the developers lobby also from the government?
I believe you are referring to the HAM projects where interest rate linkage, base linkage is being changed. So yes, the language that I could read through only suggests for the prospective project, but the demand from the industry was for retrospective implementation of the same. Now whether that happens or not, the jury is still out.
Right, right. Sure, sir. Another just a few bookkeeping questions. In the order book that we have given, we haven't taken the latest project, Vadodara Ahmedabad project in our order book, right, sir?
We have taken VM7 in our order book.
So the order book includes the 2 HAM projects, sir?
Yes, one is under construction, other is under award phase. So we have taken just 2 projects.
Because we have signed a concession agreement now.
Right. So, sir, but if I look at the order book, let's say just the EPC order book, last quarter it was around 5,700 crores, and this quarter it is around 5,100 crores.
So basically, last quarter itself the project got awarded, and we.
Right, of course. So right, so we have put it in the last quarter, sir. I'm so sorry for that. Right, sir, sure. So, lastly, if you could just give me the gross debt number at the console as well as the standalone level.
Yes. So basically, the gross debt at the console is roughly 15,000 crores, and net debt, as earlier reiterated, 12,700 crores. And debt at parent and MRM put together, excluding OD, will be roughly 3,200 crores.
3,200 crores?
Yes.
And sir, do we expect this standalone debt to increase or maybe remains at the same level by the end of this year, given our requirement for the equity in the HAM projects and all?
I think we will try to keep good cash on hand rather than reducing it. And once the situation normalizes, we can always pare it down. But for now, we don't have plans to pare it down immediately.
Sure, sir. Great, sir. Thanks for taking my questions. I'll get back in the queue if I have anything more.
Thank you. The next question is from the line of Mohit Kumar from DM Capital. Please go ahead.
Yeah. Good morning, sir, and congratulations on good set of toll numbers. So my first question is on the this new HAM project which you have won on Vadodara Mumbai Expressway. when do you expect the appointed date to be given, and what is the status of land status?
So for this project, the concession agreement, as we mentioned, has already been signed. The financial closure is to be achieved in 4 months' time. We are at an advanced stage to achieve the same. Simultaneously, on-ground work has also picked up in terms of taking over the site. And I think before we achieve the financial closure, NHAI should be in a position to hand over the land as well. That's our initial understanding.
Okay, so it's expected by Q4 somewhere around Q4.
Some turnover from this order we can surely expect in Q4 of this year.
Sir, our run rate for the EPC has declined. So for the Q2 YOY, Q1 was weak, Q2 and Q1 is flat. How should we see going forward for H2? And given that we don't have a pipeline of projects at this point of time, how do you see FY22 going forward?
Yes, it's a good question. I would like to answer this a little bit more elaborately. As an asset owner, the focus always remains on bagging assets which can give deep value and generate significant cash flow over the life of its concession. Consequently, as a part of the business model, the execution being done departmentally, the construction turnover also comes along with the win of a BOT project. Now, what we have been doing very selectively, we did bid on few HAM projects, but our focus is very clear that unless there is a good margin possible, we don't want to just go and win projects for the sake of order book. It has to make sense to the balance sheet of the company. It has to generate good cash for the company. Only then are we going to run after projects. Today, we have accumulated an asset size of over 50,000 crores across the 3 verticals that IRB operates, that is the parent company and the 2 trusts. So we want these assets to sweat, generate significant amount of cash, and consequent whatever construction turnover we are able to get, we will do that. But we are not going to unnecessarily go and try to win projects by compromising the margin or get into a turnover game. We are not going to do that. So our approach is going to be very, very selective and prudent.
Okay, understood. And on this BOT, of course, we don't see any pipeline as of now. Of course, NHAI has had issued, BOT, devised BOT concession agreement, but we don't see anything on pipeline. Have you heard anything? Your expectation for H2, or you think in FY22 only the bids for BOT is likely to happen?
So we look at it in this way, that today the 5,100 crores of construction order book gives us a visibility of say another year and a half. In this year and a half period, we have to ensure that we win sufficient orders for the construction vertical to keep getting turnover and they keep earning for themselves. So on the BOT side, yes, the government has announced 3,000 kilometers of projects. The same are yet to be seen in terms of award. But as I said, we already have Bombay-Pune project that has come in, and with the increased revenues, even on a BOT portfolio as a standalone business segment, we should start making significant profits for FY22 onwards. So construction vertical clogging revenues or picking up the mantle for generating profit is increasingly going to go down going forward as the portfolio stabilizes and starts generating significant cash. So it is not that much of a worry to us. We will look at new opportunities only if it makes sense as a business.
So lastly, on the equity requirement, I believe our equity requirement will be completely met after raising for the InvIT. And secondly, on the Vadodara key, this new HAM project, how much is the equity requirement?
New equity requirement will be almost 200 crores, but that will be required over next 2 years. And as far as the existing pipeline of BOT projects is concerned, another 600 odd crores of equity requirement remains to be met, which has to be met jointly. So not much of equity requirement remaining to be funded, and we have adequate cash flow to meet the same at this point in time.
Understood, sir. Thank you, sir. Thank you, and best of luck.
Thank you.
Thank you. The next question is from the line of Tina Virmani from Kotak Securities. Please go ahead.
Hi, sir. I have two questions. My first question is regarding the funding from GIC. Like as per the initial transaction, 44 billion was the amount which is supposed to be received from GIC. So you've already received 37.5. So out of the remaining 6.5, this rights issue would be part of this 6.5, or it's a separate transaction?
No, it is a part of the same transaction. So as you rightly calculated, 37.5 has already come in. Another 2.5 will come in now. And as the progress of the project progresses, the remaining also will come.
So remaining around 4.5 billion, that would come through in next 1.5 year as and when the project gets completed.
Yes.
Okay. And regarding the consolidation of now Mumbai-Pune is now fully part of the financials. We don't see a significant increase in the depreciation charges for this quarter, despite Mumbai-Pune recovering sharply in terms of revenue collections. Is it going to increase further, or is it going to be the run rate going forward? Because I believe the current quarter does not capture in fully the amount of depreciation which ideally should have come through Mumbai-Pune. Am I right in my understanding for that?
Yes, depreciation, though the depreciation has increased by 50%, and on Mumbai-Pune, because of the earlier past issue in Maharashtra, the full-fledged traffic has started, I think, from 8th of September. And next quarter, there will be, as the revenue will be higher, so then definitely there will be increase in the amortization and depreciation.
Okay. And lastly, sir, on the borrowing side, last quarter also you mentioned that there was an increase in the borrowing, firstly on account of Mumbai-Pune, and secondly also on account of some increased debt at MRM level also, and that should go down during the year. So far, it seems to be on a rising trend. So when do we see it going down, or is there any specific target in mind that by end of FY21 we will have a gross debt number of so and so? What is your guidance on the gross debt number for the consolidated basis?
So rather than giving you a number, I would say that we are, as a conservative strategy, we would like to keep cash on hand for now, rather than paring down that debt. And by end of FY22, we will look at a long-term strategy how to pare it down. But till then, elevated levels of debt and elevated levels of cash in hand both will continue given the uncertainties.
Okay, so it will be in the range of this 14 to 15,000 crore, because now Mumbai-Pune debt will be fully there in these numbers.
No, yet.
So no further increases.
No, there are two tranches of Mumbai-Pune which are still to be paid to MSRDC. As you know, we have only paid 6,500. Another 850 crores in March 2021 and 850 crores in 22 is still to be paid. Some component of debt drawdown will happen at that time also at the SPV level. So, as I said, after a year or so, the debt level will stabilize, from where the journey downwards will start.
Okay. So we'll start seeing it going down from FY22 onwards.
Yes.
Lastly, sir, you've also given the gross debt number for MRM and parent, which is around 3,200. Can I have the net debt number also?
So net debt, roughly 2,000 crores is the cash available over there. So net debt will be 1,000 odd crores.
Okay. Thank you, sir. That's all from my side.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, good morning, sir. Thanks for taking my question and congratulations on the good recovery in toll collection. Sir, I think in your opening remark you said you're looking to add 4 to 6 odd projects. Will you be able to quantify in terms of value that you're looking to add? And when you say 4 to 6, these would be, we're talking about hybrid annuities only, because at least at this point in time, we don't have much in terms of BOT. So when you say 4 to 6, these would be hybrids, or expect some of these BOT doors also to come through during the year, and you'll be able to have some of these come to you?
So yes, your understanding is right. We expect 4 to 6 projects. When we say substantive amount of those will be hybrid annuity, and maybe 1 or 2 BOTs if they get announced and bid out before end of this financial year. So primarily hybrid annuity projects is what we are talking about. And in terms of amount, anywhere between 5 to 7,000 crores of additional orders is what we will look for to win in near future.
Okay. So say it was, understand that after this new concession agreement that you have for hybrid annuity, our level of comfort with this vertical has gone up substantially because of the way the changes have been incorporated, right?
I couldn't get your question clear.
No, so I'm saying, the concession agreement that we had, day before yesterday from government authorities or NHAI towards the HAM projects, they have linked now the return profile to your bank rate, instead of bank rate to MCLR. Would it make you go a little aggressive on the hybrid annuity side, or our expectation in terms of returns don't change from these, which is where you would still prefer BOT roll over hybrids?
I think the adjustment announced by NHAI is more to sync with the way the bank rates have moved and the disparity that had arisen as a result of that. It's more of a course correction. I don't see the returns in HAM project going up as a result of corrections done by NHAI. It will at best go back to what it was originally. So HAM projects typically have low IRRs and they are more of a deferred EPC project. So they will continue to be the same. They are not going to generate significant amount of value as a company. So that value creation can only happen from the BOT side. But at the same time, to keep your construction being busy, you do need hybrid annuity projects. And that's what we intend to do, and that's what we said when we said 5 to 7,000 crores of projects.
Sure. And one more, if I may, please, on the strategy side, internally, have you given it a thought to kind of look at some other segments? Because we've always been kind of single segment focused company, roads, and NHAI, has been trying to kind of scale up, but then we've seen shocks. We saw them go to almost around 7,000 odd kilometers of awards in between, and suddenly it went down substantially. And this year again, they're only targeting 4,500, which is still way below the peak that we've seen. So the growth has been a challenge with NHAI for some or other reason. And have you given it a thought to kind of look at some other segments, like, let's say, like some airports, given the fact that we already have some good work?
Diversification at this stage is not immediately on cards. We keep looking at opportunities. But at the moment, we will still wait out and see what the NHAI has to really offer as regards the 3,000 kilometer BOT pipeline they have been talking about for a long time. And in the meantime, we will keep ourselves busy with few HAM projects. And once we have a long-term visibility from them, then we can re-strategize as to what is needed to be done. But till then, focused on the road sector alone.
Sure. And Anil, so 2 bookkeeping questions please. One was essentially how much is the pending equity requirement for our first hybrid annuity now? Or is it already done?
I think first hybrid annuity, it will be approximately 50 to 75 crores only.
50 to 75 crores. And how about the deferred payments that we are supposed to receive from the private investor money, which is 3,100 odd crores, which was there as 3,100 odd crores in March 20. I think a part of it was supposed to come through this year. Any clarity on how much could be the amount this year and how much could be the amount next year?
I think probably because of the COVID this year, by FY21, we may not receive any amount on that. And probably the most of the part of the amount will come in FY21 only. Anyway, only 700 crores was shown as receivable within a year.
Okay. Sure. Okay. Thank you.
Thank you. The next question is from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Sir, hi. So my question is with regards to a news item which has come in on the stamp duty paid on Mumbai Pune Expressway of 0.2%. So if you can just clarify what is the issue here?
Sure. I think it is a non-issue to my mind because as you all are aware, stamp duty is not something which an individual decides. When you get into an agreement, you have to file the document with the registrar and they adjudicate the document and instruct the party how much stamp duty is to be paid. So a similar stand was taken in case of Bombay Pune also, and we had filed the document with the registrar. They had adjudicated the agreements and then directed the necessary stamp duty to be paid. That amount was then vetted by the lawyers and bankers of MSRDC, namely Amarchand Mangaldas and SBI Capital Markets. And after the due diligence was completed, the stamp duty was paid and agreements were executed. So somebody is trying to rake up an issue out of a non-issue, and we are not going to get into that at all.
Okay. Okay, the second question was on the pledging of the InvIT shares. So any view there?
Pardon?
The pledging of the listed InvIT shares by IRB.
Yes.
So any view there? So why was it done? And
no, it was done to raise cash at the company level. As a security. It was given as a security.
Okay. There is no recourse. I mean, these shares cannot come in market, right?
I don't think so.
Okay. Okay, sir. That's all from my side. Thank you and wish you a happy Diwali.
Wish you a happy Diwali too.
Okay. Bye. Thank you.
Should we move on to the next question?
Yeah.
Thank you. The next question is from the line of Rohit Natarajan from Antique. Please go ahead.
Thank you for this opportunity. Sir, you talked about that in your strategy ahead, the focus will be more on BOT and HAM projects. But what about the TOT? Earlier we had some inclination towards TOT projects. In fact, even NHAI TOT packages you have bidded for. And even in the current NHAI, there is a fifth round of TOT package being doled out. What is your interest over there? I mean, do you see that as an attractive opportunity?
Yes, you are very correct. I think our stated policy remains BOT, TOT and HAM in the sequence that I mentioned. And in fact, IRB is proud to say that the largest TOT in time value concept is now with IRB. So we are certainly not going to shy away from TOTs. And in fact, the reduction in size by NHAI on the TOT projects is a welcome idea. And we are evaluating those projects as well.
So the fifth round they have invited for, where I think the last bids, the submission, technical bids, they called for even by December they are asking for the bid submission. So are you a part of that particular fifth round of TOT?
Yes, we are.
Okay. So my second question is more to do with the rights issue that you're talking about on private InvIT. Can you just elaborate more on what exactly that number would look like there? Exactly.
Yeah. So it's very straightforward. We had signed an agreement with GIC where they were to infuse total 4,400 crores as their part of equity in the private InvIT that we have formed. 3,753 crores had come in as of March. And this is the next tranche as a part of the same transaction. So IRB will be putting 260 crores and GIC affiliates are likely to put in 250 crores as a part of the rights issue, which should close in the coming week.
Okay. And lastly, a bookkeeping question. If I could get the breakup of this quarter's consolidated interest cost, of how much will be the interest attributable to this Mumbai Pune package?
Mumbai, Pune.
I think the outstanding debt on Mumbai, Pune is 5,564 crores, which you can calculate at 8.4%.
Okay, sure. That's it, sir. Thank you.
Thank you. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yeah. Thanks for taking my question again, sir. So just little clarification. So the 4,400 crores that was supposed to be invested was to be invested by GIC. So why are we participating as a 250 crores into that amount as well?
Because it's a 51-49% combination. So a private InvIT where IRB continues to hold 51% units and 49 goes to GIC. So naturally, every time they bring in money, we will put in money to retain our 51% share.
So basically, just to sum it up, our share was 4,600 and there was 4,400. They are bringing their share, we are bringing our share.
Right. So if I remember correctly, initially they had said that, okay, 3,000 crores will be kind of a buy, and then 1,400 crores equity, both of us are going to put in. So their share was 3,000 plus 1,400, that was 4,400 crores. And because we had already put in around 3,200 crores, that plus 1,400 crores was taking our share to 4,600 crores.
Yes.
Am I right about that calculation, sir?
Yes.
So what I'm trying to say is that 4,400 crores was supposed to be the total contribution from GIC alone. Our contribution was supposed to come, of course, along with that. So there is no change in that, right? GIC will contribute 4,400 crores to this InvIT. We will, of course, commensurate the equity contribution in the 51-49 ratio.
Yes, absolutely no change.
Right. So that 4,400 crores is going to come in over the period of whatever the investment period is required.
Basically, as earlier explained by boss, 37.5 billion came in first tranche. 2.5 billion is coming now, so we will reach up to 40 billion. And 4 billion will come in over the period of 9 to 12 months as the construction will progress.
Fair enough, sir. And sir, when sir mentioned that the total equity requirement for existing projects is around 600 crores, does that include the 250 crores that we are putting in this private InvIT, or that was for non-InvIT projects?
See, basically, if I can just explain you how much equity left out, roughly private trust equity left out is 450 crores, and the both InvIT put together will be roughly 200-225 crores equity is left out. So both put together translates roughly 600-650 crores of equity balance.
For the total portfolio which we have across all the InvITs and personal and our own portfolio, right, sir?
Yes.
Fair enough, sir. So just last question, on the EPC side, we did around 700 crores of revenue this quarter. Given that the second half project will probably have some contribution in Q4 only, do we expect some meaningful pickup in the EPC revenues in Q3 and Q4 because of maybe monsoon not being there in these quarters? Or do you believe it would probably be in the same range and it's only next year that we can see some pickup in the revenues?
So my sense is that the Q3 and Q4 construction turnovers should be much better than the first two quarters. And I think, as I said, the balanced construction order book provides us visibility for next 4 to 5 quarters.
Fair enough, sir. That's good enough for me. Thank you, sir. Thanks for taking my questions and wish you all the best.
Thank you.
Thank you. The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Sir, so just wanted to know, what is the revised timeline for completion of the 3 Rajasthan projects and the Hapur-Moradabad project, and if possible, the outstanding EPC values of these projects, sir.
So, Ashish, I think 2 of the 3 Rajasthan projects should get completed before March. Agra-Etawah project likely to get completed this month itself. Hapur likely to get completed by September next year. And the 3rd Rajasthan project before monsoon next year.
Okay. And the outstanding EPC values, if possible, for these projects?
Do you have it ready?
We will share you with separately.
Sure. Yeah, that's it from me. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was our last question. I now hand the conference over to Mr. Virendra Mehskar for his closing comments.
Thank you everyone for taking time out and joining us on this conference call. We would like to once again wish you all a very happy Diwali, prosperous New Year, and good health, and stay safe. Thank you so much for being with us.